Do some stretching then.
I will. Morning, everyone. It's the 16th of Feb. We're Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare and Ian Coleman. Morning, guys.
Morning, all.
Yeah, morning.
That was a reference to my hip rather than anything else. How are we both doing? Okay?
Yeah, all right,
Not
mate.
too
You?
bad.
Yeah, not bad, thank you.
Snow's gone.
Yes, all gone here too. Bit grey out, but yeah, at least you can walk on the pavements now without slipping over, which is good.
Yeah.
News-wise, what's going on? Looking at UK first up, the Prime Minister Boris Johnson is planning on lifting or gradually lifting the pandemic restrictions.
Pubs.
Schools is what I'm going for first. Get rid of
exactly.
the kids.
I wonder what the national survey would be if you sort of like said, "Oh, what do you want? Do you want pubs or do you want schools?"
Yeah,
I think it'd be close.
Yeah, it'd definitely be close.
Yeah, you can't sit outside yet, can you? So it's not quite.
No. Talking about getting the schools back maybe from the 8th. No decision yet on whether all age groups are going back at the same time or whether or not it'd be a staggered system to get people back into the classrooms. And following on from that good news, we've got maybe some negative news in the UK with regards to taxes. The UK could need to increase taxes by about £60 billion. That's according to latest reports.
Is that per annum?
I'm not sure exactly. That's what they're going to need to do to balance the books, according to the Institute for Fiscal Studies. The warning sets the tone for the Treasury's budget on the 3rd of March, when Rishi Sunak is due to outline how he intends to address the highest government borrowing in peacetime. So that could be a bit painful. The energy crisis is continuing in the States. Texas power systems have been crippled by the cold weather that's across the region there. Energy prices are soaring to record levels, as I'm sure we'll come on to shortly. 5 million people across the US are taking it in turns to be plunged into darkness to avoid a total collapse of their grids. So that's pretty unprecedented, I would have thought. That's pretty much it in terms of headlines. We'll come on to what to expect from the day ahead in a bit. But how did you see things playing out yesterday, gents? Obviously, it was a holiday in the US, so a little bit of muted action in prices. But
yeah, it was a bit light, wasn't it? On the.
Who wants to go first? We're looking at FX, indices, or commodities.
Yeah. Do you want to go first?
Yeah, mate. I don't mind. So a doji style candle highlights indecision. This is the dollar index. That's a daily chart. There's 4 dojis there, which basically says that we're currently going nowhere, but we've keep on going back to this. And we'll keep on going back to this. This is now what I believe to be a short BC leg. So stocks are still sort of drifting higher, aren't they? And I think that's going to push the dollar index down towards these sort of levels, which is 89.47, 89.38. So a break of this swing low, and we just had a little correction up from it this morning, maybe to spoof a couple of people into thinking we're going to go higher, and then it's just turned around and pushed lower again. So I think we're going to break there and then push down to complete this large butterfly. Sorry, not butterfly. What is it? It's a bat formation. So to complete the bat formation, then move to the upside. So if that gets reflected back onto euro dollar, let's have a look at this one instead. So again, we said that we thought that this correction lower, and that is probably it now, looks to be limited. And then we push higher towards these levels, so 122.55, 122.68. I think the favoured one at the moment, because it's going to extend, or if the cipher pattern plays out, it's going to extend below its previous lows, is is dollar CAD. We did mention this level here, 88.6% pullback level, because there's some sort of Bollinger Band support around there as well, and we've just seen a tick higher from there. But again, I don't think that is going to hold this decline, especially with what Joe said, the energy crisis in the US, pushing oil prices still higher. And obviously that strengthens the Canadian dollar and pushes dollar CAD to the downside. So we've just moved up, nearly got a retest of 126.60, which is the previous swing low. So was support becomes resistance, and then down here I think towards 125.20, 125.10, which gives us a new swing low. As far as the daily chart is concerned, and if we can note on this daily chart, we have that bounced off a 78.6% fib, but 125.20 is near to this weekly 261.8% extension level. So look for a bit of divergence. We make a lower low, oscillators make higher lows. I think if you get towards 125.20, 125.10, then you've got to be considering a medium-term move back to the upside. Aussie dollar, and again, I'm sort of trying to find counts here, but it's all about these short time frames at the moment. And I think with commodity currencies taking a rally, I think Aussie dollar is no different. I mean, we have stalled at a 261.8% fib, and that's of that wave there. But the crab formation's not up here, not completed until up here, which is 78.86, 78.72. I think dollar yen is quite interesting this morning. We've mentioned this quite a few times. 105.61 is an 88.6% pullback level. If we go to this time frame here, it's got the potential of being an extremely decent R trade, with the potential target down here at 10065, 10058. That would need not a collapse in stocks, but you definitely need to see a turnaround in stocks. So I'd like to see what Steve says today, whether or not he thinks it's got potential or not. And if we go to this time frame, no, this one, we have got confluence here. So basically, the 88.6 is very close to the 161.8% pullback level, which again makes a bat formation. Maybe just a little move back up to test this 105.66. Like I said, it offers, you'd want to see a decent reversal formation up here, and we're not seeing it yet. But like I said, it does offer decent risk reward. Euro sterling, and again, rallies just keep on finding sellers. I mean, if we look at this morning, this is just the 1 hour chart. Got a doji style candle from this morning's sort of correction higher, and I still think this is the case. If I can realign this chart, is that we're going to see continued movement lower towards this support zone, which is at 86.30, 85.80. Dollar yen, oh sorry, not dollar yen, euro yen. It smashed past a butterfly formation. That was the confluence area there. Did see a mild correction, but again, no reversal patterns. And it's now moved up to this next confluence area. But I think you'd have to see dollar yen turn around quite aggressively, like we said, for this to turn around, because this is still getting driven higher, I think, by euro strength at the moment. But potentially 128.42 is a resistance level. If we go to this time frame, which is a weekly chart, we haven't really got a resistance level until here, which is 128.62, which is nearly 200 points higher. Not 200 points higher. It's not. It's close, actually, isn't it? Sorry, going completely mental. Yeah, which is close to this 224 extension on the 4 hour chart. So again, potential for just a bit more of a hike to the upside, but I'd be watching stock indices really to see whether or not there's potential for a turnaround in these yen crosses, because they've been extremely resilient this week. That's me done.
Lovely, thanks, Ian.
Nice.
Steve, what are you seeing?
Well, I wouldn't sort of I don't really want to fight against this rally in the stock indices, to be honest. Even the FTSE, I don't really want to fight against it. We've got this the weekly chart here. This is obviously a great start to the week, and we're up to 67.81. So really targeting another 80 points to retest the swing high, which would be the highest level since the pandemic began. On the daily chart on FTSE, we were talking about, or I was talking about, a head and shoulders formation. Still a bit of potential for that, but it looks like it's clearly broken the left shoulder. So, and it's obviously achieved a high greater than this sort of like other level just below the head. So I think if we can manage to get through 68.11, which is only 25 points away, 69.60 is within easy range then. We're still in the ending wedge formation, so yeah, there is signs that this is coming to an end. It does feel a little bit bubbly, but again, until we see a clear break of these wedges and even sort of like the formation of the double top here, a break of the neckline, which is miles away now. So nothing really to sort of slow this down.
What's going on with the DAX, Steve? It didn't take part yesterday, did it?
No, it didn't. It's just pretty much feels a bit tired, everything. I suppose there's better value elsewhere. It's on the hourly chart, we sort of struggle to get above the 15th high on Monday's high. Overnight, we've sort of like sold off quite aggressively. Looks like we're going to retest this swing low from yesterday, and also the Ichimoku cloud on the hourly chart maybe offering some support. And you can see sort of like from on the sort of daily perspective, it's just, I think it's just tired. Momentum is really sort of like slightly negative to sideways. That's on the hourly. On the daily, it's the same sort of story. You can sort of like see the momentum isn't really.
But there's no vol on there.
No. Last week's chart was an indecisive doji type candle, and really haven't got off to a great start today. CAC's sort of a little bit better. It's broken above the this wedge formation. I'm going to redraw this now, and sort of it's a real challenge to get any further. But it's its previous tops here, where we were looking for the potential for a double top. It's taken those levels out quite aggressively. So yeah, it's a bit of a sort of scratchy head time. Everything looks bullish, but the momentum is quite dire. It's just a real grind, and these are sort of like really horrible markets if you're trying to look to pick a top. And so you've really got to go with the flow. In Asia, markets look a bit different. They look very, very buoyant and sort of like nice momentum as well. There's the Hang Seng broken above the highs from 2019. China, bullish channel, can't even hold it. That's sort of like, again,
how many days in a row is that of positive gains there?
Well, it's impossible to be more than 9. So that's 1, 2, 3,
it looks more
4,
than that
5,
already.
6, 7, 8, 9, 10, 11, 12. No, that's impossible.
The rule of 9, 5 will be all over that.
We have a rule of 9, and it is ignoring all rules. So yeah.
Any divergence creeping in?
Yeah, I mean, there's huge divergence, really, but you can't really. Yeah, you can't really argue against it. Sorry, the postman
was that your other job?
arrived. Yeah, I'm the postman spotter.
I thought you were bollocking Cameron then. I thought he was chirping up, saying it can go more than 9.
He was ignoring himself with his headphones in. He's quite funny. Yeah, and sort of like this channel within a channel in the Nikkei, and there's no divergence there.
No.
There's the potential for slight divergence, but I'm not going to bet against it. It's just there is going to be some sort of correction at some point, but I just don't know what the catalyst will be.
No, I don't think it's in a minute.
Yeah, commodities, gold quite interesting. Well, trying to be interesting. It's sort of like it's holding on to these levels. Obviously, the dollar is weaker, should lend gold a bit of support. But it's not really happening at the moment. I still think we've got potential for the downside. It's a bit of a concern for gold longs, I think, really. There's been opportunity for it to rally and to retest these levels. The 1848 is a near-term target, and the 1875 would be a break of there would be a clear sort of like positive note to gold, but I just don't think we're going to get it. I think there's more chance of a retest of the 1785 and 1765 below. So I'm sort of negative on gold. I had it in the gun to the head yesterday. Stock was way too tight. But yeah, it's off to sort of like okay start. Silver's looking slightly more positive, but again, I think that's sort of like these. That's been sort of hampered by gold as well, yeah. So I'm sort of like thinking precious metals a little bit negative. On the oil side, obviously, we've got the issues going on with the weather in the States and a sort of big increase in demand, which saw a decent spike higher yesterday, and we still got the gap on the chart.
Yeah, it didn't fill. Hasn't filled yet.
No, it's not far away from filling. But yeah, like we said before, we've talked about oil for a while now. These medium-term moves up still sort of got decent potential. 62.50 is a 78.6 retracement, but I'd be more interested in the previous swing highs in here, which come in from 62.50 up to 66.60. So nothing really slowing the oil down unless we get a sort of a miraculous warm snap, which doesn't look like it's going to happen. Global warming's finished and done with, so let's think about the next ice age.
It's going to be 16 degrees next week, isn't it?
Yeah, as I say, 16, 17 degrees down south.
Yeah, bounce back, lovely.
I'm moving.
Excellent, but that's me.
Thanks, Steve.
So that's bang on that lower trend line now, Steve, is it?
Yes, yeah. It's sort of like hit it and came back quite nicely. So I don't know. I
short oil then.
The only, I suppose, the only other things I can think about that could affect the market are still positive. Middle East conflict escalating there. So I can't really sort of. Obviously, the lockdown's completely been ignored. It's still going to be a while before the airlines open up properly. A long while. So. But at this level, we've said yesterday, this is a really interesting level, $60. It sort of brings the frackers back into it in the US. The shale boys, they can compete at these levels. So potential that OPEC plus nations start to think, let's.
So when they had to frack off before, it's now frack on.
Yeah, exactly.
Excellent. Okay, fantastic. Thanks, guys. So, gun to the head trades from yesterday. As Steve, you mentioned, you had a gold trade, which was stopped out. Quite a tight stop loss on that one. Ian, you were stopped out on Bitcoin. And we had a tiny win on oil of 0.75R. I was looking for that gap fill, which still hasn't happened. So, maybe some opportunity on that. But obviously, the risk reward doesn't look as attractive now. So, a little bit, lost a little bit yesterday. More of the same, really. Chopping, not really going anywhere. It's getting quite close between you two.
I'm coming back, am I?
I don't know. Is Ian going to give me a little kiss there, and then he's going to rally like a biatch, or? Well, I think it's all about the sort of the point.
All I'm doing there is I'm coming in to meet him down the pub. That's what's happened.
Is pips like goal difference? Yeah. Is that goal?
Yeah, maybe. That's what it'll come down to if it's a draw.
That's Steve moving up from Essex, and I'm moving down from the north, and we're meeting in somewhere like Leicester or Leicester Forest Services.
Well, what about the Cotswolds? The Cotswolds would be nice.
Oh yeah, that's nice. Yeah.
Yeah, so Ian, you had a crack at Bitcoin yesterday, and that's not done you many favours on the old on the pip count.
Right. Nice. I'll get it back to it.
Cool. Go on, Ian. What you got?
I've got to. No, I'm not going to fight the trend for a change. He says going for fighting the trend in oil. I've been going on about this for God knows how long, so I've got to go for it. No, I just moved the stop down there target because it's irrelevant. today. 105.45 with a stop just below 105.8. I can get that in nice and tight. So selling dollar yen 105.45 with a stop at 105.80.
Boom! Look at that.
It's going to be about 2 weeks to reach its target. But if it did something silly happen today, it's 13.7 R.
Wow, that would do. Steve, you got one ready?
Yeah, of course. I'm going to go Bitcoin 50,000. This is the psychological level, and there's obviously decent orders up there. I've got the stop again is a little bit too tight. Really, the stop should be down below 47,000, but I'm going to go for it. Getting long at 49,150, targeting 54,150, stop at 48,150. So yeah, going to go for it. I think we get a break of 50,000. We should see a nice spike higher where there's all them stops sitting above there of the people who want to be short of Bitcoin. Surely there's none that
not
exist.
many of them.
I think there's 95% of the market is long. So
Yeah,
there's only that 5% are going to get their arses smacked today. You heard it here first.
Lovely. Good luck, mate. I'm going to take a look at the DAX. So we talked about how that didn't really do much yesterday compared to the other markets in Europe, like the FTSE and the CAC, who both pushed higher. The DAX didn't do an awful lot. It seems like it's stalling. This is an hourly chart. We've got some decent divergence on the RSI. Potentially maybe a little wedge pattern that it's broken out of. Certainly a big old candle there that was posted this morning at 5 a.m. So you can find a bit of a reversal. So I'm going to sell it now at 14,094. I'm going to target a move down to 13,905 with a stop loss at 14,170. So just looking for 2.3R on DAX today. It is a bit boring.
I suppose when you're pit leader, you can do what you like,
exactly.
Just defending now.
Well, that's boring, mate. I see a lot of that in the Premier League. Just sort of like defending, trying.
Didn't see much of it from your team, did you? That 7-minute capitulation.
All right, if I could get personal about it. Anyway, my team's West Ham. I don't know what you're talking about.
Oh yeah, flying.
Fourth moment yesterday.
Yeah, well done, West Ham. Okay, so there's the 3 trades today. And in terms of data out, we've got quite a bit today. Eurozone GDP at 10 a.m. Q on Q. Quarter-on-quarter rate is estimated to be minus 0.7. We've also got the German ZEW index, which is expected to fall to 61. They're both out at 10 a.m. At 1:30, we have the US Empire State Manufacturing Index. The index is expected to rise to 4.6 from 3.5. And then this evening at 10 minutes to midnight, we have Japan trade balance. Exports rose 2% in December. Anything else that you've seen on the calendar, Ian, that we need to be aware of?
No, Chinese New Year, obviously, and early risers tomorrow morning. CPI inflation figures out the UK.
Cool. So obviously US are back today from their long weekend. We'll see how they react to the markets. Obviously, they only know one way to trade, and that's just buy everything, isn't it? So
I heard some. I read some in the Bloomberg report yesterday. There were some horror stories about retail traders that got involved in the old GameStop.
Yeah, that's down off 90% off of its highs.
Yeah, so a lot of them are taking out personal loans and stuff like that. I think it's probably Bloomberg trying to scare retail traders into not getting involved.
They should have opened up an account with an FCA regulated broker, and then they wouldn't have to pay that negative charge because it's the account balances are protected against negative movement. Yeah, there's a lesson for you.
Yeah.
I thought most of them actually did options, so I thought the money had to be in there for them to put the trade on. But obviously a lot of them forgot about that and went to the wrong people.
There was just too many people that just rank amateurs and have got absolutely no idea. They're just following their mates that are talking about it, or and that's what happens, isn't it? They get sucked in and bad things happen.
Yeah. It almost like makes me feel like, was it done on purpose to suck all these guys in? But that would be a conspiracy on top of a conspiracy. So we're not going to go there.
Yeah.
Yeah, I think it is really bad. I hate it to see retail traders lose money. That's half the reason that we do our job, to try and educate and sort of provide trade ideas that you would sort of like, take into account these sort of things. Only risking 1% of your pot on every trade and things like that. But then when you try and explain that to a retail trader who's looking to try and become a millionaire or pay off his college loan or whatever,
It's not exciting enough, is it?
no, it isn't. It's a really boring job, being a trader. It's and there have been moments in the past where
Being a
it's been really
successful
exciting.
trader is boring. Being a trader
Absolutely.
is exciting. But if you want to be a good one, it has to be boring.
It does really. It's all changed. It's all changed from the life days. It's not the same anymore.
No.
When you sort of put on sort of positions.
Not that I know anything
banks.
Cool.
Anyway.
All right, gents. Well, let's wrap that up for today. We'll be back tomorrow morning. Good luck if you're trading today, and see you then.
Okay,
yeah, enjoy.
Bye bye.